Hey, good morning, everybody. How's it going? I just wanted to create another video for you guys. As you guys saw in the thumbnail, today we're covering financial literacy for beginners. So kind of giving you guys a broad overview. And then we'll be having some videos upcoming on the channel and the fact of actually breaking each of those categories down and kind of giving you guys some ways forward and actually demonstrating some examples for you guys. So with that, let's get into it. All right, so as you guys can see, I'm on a basic website of Investopedia. I literally looked up a guide to financial literacy. So first and foremost for financial literacy, you're going to learn the skills you need for a more financially secure life, which is why you guys are here. Basically, this is going to give you a overview of it, and I'm just going to kind of break it down and explain what it means to me. So financial literacy in big words and in the definition is actually the ability to understand and make a variety of financial skills, including personal financial management, budgeting, and investing. It also means comprehending certain financial principles and concepts such as the time value of money, compound interest, managing debt, and financial planning. And if you don't understand any of those terms right now, that is totally fine. That is the entire point of this channel, is so that you can learn what each of those terms mean. So the biggest thing overall, though, is just knowing personal financial management. That is what you need to learn financial literacy for, is so you can do your financial management for your life that fits. There is, in my personal opinion, there is no one size fits all. There's a one size fits most, but the more you learn, the more you can tailor it to you. And they're going to talk about the importance of it, and I just covered that for you. So personal finance basics. Most of you guys out there, you already probably have a bank account. You may not know that there are different types of bank accounts, as well as different types of banks. So you're going to have your checking accounts, your savings accounts, you're going to have your retail banks, your credit unions. But actually, what are they? So your retail banks, those are going to be like your Bank of America, your Truist, your USAAs, your Navy Federal, Navy Federal is actually a credit union. So that'll get into credit unions in a second. But retail banks, your Chase, your BB&Ts, your Truist, Bank of America, if I haven't already said that. But those are going to be those brick and mortar buildings that you see whenever you go up and down the street. But also credit unions are going to be those buildings you see up and down the street. But credit unions are generally more regionally located. So you're not really going to find a Southeastern credit union, if that exists, in the northern west of the United States or over in the Middle East or in Asia or something like that. So credit unions provide savings and checking accounts. They issue loans and other financial products just like banks do. However, they are not for-profit organizations owned by their members. So credit unions tend to have lower fees and better interest rates on savings accounts and loans. So say, for instance, this is your first time ever getting a loan or creating an account, it may be good for you to actually go to a credit union, which is actually what I did when I lived in Warner Robins, Georgia, because I'd actually never had a car loan in my name, coming to find out. So even though I had a car loan, but it was not reporting to my credit because it was a buy here, pay here, which we'll cover that way down the road. But credit unions typically are going to have those lower fees, as well as sometimes they'll have a better rate. It's not always a guarantee, but it's a good starting point. So if you're looking to get into it and you've never created an account before, a checking or a saving, a credit union is a great place to start. So with that, what type of bank accounts can I open? So you have your main two that most people know about. So you have your savings accounts. These are your interest-bearing deposit accounts held at bank or financial institution, and they pay a low interest rate, but their safety and reliability makes them a sensible option. The big thing with savings accounts is typically at most banks, a savings account is going to have a limit on the amount of withdrawals or transfers from that account. It is meant to be a savings account. It's meant for you to put money into it and then not routinely take it out. So you very minimally want to be taking money out of this account. So very seldom do you want to be taking this. As you can see right here on the screen, they're building for an emergency fund. They're saving for a short-term goal like buying a car or going on vacation, or you're just putting your extra money into an account. If you don't have a high yield savings account, which we'll talk about that actually right after this. But a savings account is basically an account where you know that you and your family are going on vacation, or you know you want the new Xbox, you want a new car. This is an account that lets you put the money away so it's not in your main checking account and gain a little bit of interest, and you know that money is safe and that you know that you have access to it. So the big one that most people have, and it's typically linked to your debit card, and the majority of you probably out there have, is a checking account. So this is the account that you make deposits and withdrawals into. It's very liquid. There's not really any limits on how many transactions are going through that account every month. There may be a monthly fee at your bank unless you meet certain criteria to have that fee waived, which I would highly encourage you to try and at least hit those monthly minimums or whatever that account requires to have that monthly fee waived. I believe with Truist or Chase, it's a $12 monthly fee unless I have a $500 in the account deposit into the account or $500 in the account at the end of the month, so that they waive that $12 fee. Because if you think about it, that $12, if I times that throughout the entire year, I'm paying over $120 in fees to the bank. It's not making me more money with me letting my money sit there and do business with them. Like, remember, this is a business. A lot of people look at banks like, oh, well, I have to have a bank. Yes, you do have to have a bank. But with that, they're a business. If you went to a different store and you paid for something, you'd want something in return. So you doing your business with that bank, what are you getting in return from that bank? And then last but not least, a lot of people actually really don't know about these. Is a high yield savings account. So basically, this is a savings account, just like a normal savings account, but they gain more interest. So you'll see like a 4% or 3%, maybe even a 5%. Your typical savings account only has 0.1% interest right now on it, which is not making you a lot of money. You'll probably, if you have any money sitting in your bank account, you typically probably see a few cents here and there deposited into your account, maybe every month or every quarter, depending on when they actually compound that interest. But a high yield savings account is going to gain 3 to 5%, which is way better than the smaller savings account. But with that, they typically require you to have a larger minimum balance as well as a bigger deposit. So some of these accounts, like, they might require you to put $5,000 into them off the get-go. And also with that, they can have higher fees if you don't keep X amount of money in that account. So this is like, if say you've been doing this for a few years, you've saved some money, and now you're like, okay, hey, this is my 3 to 6 month emergency fund that I've built, and now I want to just set it aside so that I know that if I ever need it, it's going to be there, but also it can gain a little bit more money for me. So with that, rolling into an emergency fund. What is an emergency fund? So most people use separate savings for their emergency funds, eventually total enough to cover at least 3 to 6 months worth of expenses. That is what is recommended. So basically right now, calculating not your play money, all your extras. If you just had to survive, if you were paying your bills and you were paying your mortgage and you were eating and you weren't getting behind on anything, utilities, internet, you could probably cut the internet off. I mean, you're gonna not like life, but if you're building up a true 3 to 6 months, make it to where my recommendation would be make it to where 3 to 6 months is life is normal, but you're cutting back on those fun nights of, hey, I'm gonna go out to the bar tonight, or oh, hey, we're gonna go to the movies, or oh, hey, we're gonna go to this event. You're cutting that out. You're doing the bare minimum. You're having a decent quality of life, but you're in a turtle mode where you're protecting the home, you're keeping your life while you get through this emergency that has happened in your life, and getting out of that without having to go into debt to actually recover. So then they talk about the introduction to credit cards. That is going to be a whole nother gamut to cover, so I'm not going to cover credit cards today. I encourage people to have a credit card, but only if you're responsible with it. If you're not a credit card person, which I will talk about that later on in another video, then you don't need to have a credit card. If you're not paying, if you do currently have credit cards and you're not paying off your balance every month, you're paying a stupid amount of money in interest to the bank. If you look at your statement from that bank, it will show you you're straight. And if you need help looking at that, just shoot me a comment below. I would love to work with any of you guys and help you guys out. And then we're going to start talking about annual percentage ratings. That's what I was talking about, that 0.1% for like the savings accounts. But there's APRs on your credit card. That's how they make their money. So the median APR today for credit card is 23%. So every time you swipe that credit card, if you don't pay that credit card off, they're charging you 23% more on that item. So think about that whenever you're swiping that card and you don't know if you actually are going to have the money. And this is why I like credit cards, because you have those travel cards, those cashback cards, balance transfers, or low or no APR, which you can kind of use some of these tools to build your way out of debt if you've accrued a certain amount of credit card debt. And then the biggest thing that's going to help you with financial literacy, though, is going to be how to create a budget. I'm going to do an entire video. If you're going to do it in Google Docs and like their little numbers, basically an Excel equivalent. So to show you guys how there's a free tool out there that you have access to every day. It even will be on your phone. It'll be on your computer on how to actually create a basic, simple budget and actually kind of show you some things to you guys. And then the things that are needed for a budget, your income, your expenses, your savings. Because if you're not saving, there's going to be a rainy day. The only question is when is it going to rain? You never know when it's going to rain, but you need to have that money set aside for the rainy days. And then how to start investing. The best way I would recommend, without even getting into the nitty gritty of investing, is the 401k at your company, especially if they have a match. Say, for instance, my company does up to 4% that I work with. So I invest 4% of my income into the stock market and our 401k or our retirement fund, and they give me a 4% match every time I put money in. But only up to 4%. If I put 5% in, they still only match me 4%. But if you're not at least doing the match, I would highly recommend you to see if it works within your budget, which we're going to cover in another video, or you can go watch my video on how to create one once I put it out there. And you will see how you can put money aside to match, to have a 401k. So when you go to retire or you need money down the road, if something happens, you have money set aside that has built interest, and you are allowed to use it to have the life that you want. And then if you really want to get into the risky side of the world, and you will start playing and dabbling in the stock market, in the fact of it is risky. You can lose literally everything that you put into it. That is the difference between a 401k and the stock market. A 401k, you have someone else doing it for you. Typically the company is paying the fees and you're helping minimize those fees as well. But the stock market is you taking an individual chunk of those companies and hoping that their stock goes up. And then there's a lot of ways to invest. You have robo-advisors, discount brokers, full service brokers. The list goes on and on. But that is not the basics of financial literacy, in my opinion. Then you even got bonds. Bonds are things that are issued by the government, saying that, hey, if you give us X amount of money, we will pay you X amount of interest if you don't cash this in for X amount of time. Are banks safe? A lot of people don't even know this. So the FDIC, so the Federal Deposit Insurance Corporation, up to certain limits, currently defined as up to $250,000 per depositor per an insured bank per ownership category. So with that, if you have a great deal of money up in the bank, you can make sure it's all covered by opening multiple accounts. So remember, it's per ownership category and it's also per bank. So if any of you out there have $250,000, but if you're watching a financial literacy for beginners video, you probably don't have that kind of money laying around. But if you do have $250,000 in a bank account and you go over that limit, if you have $250,000 and $5, that $5 is not protected by this right here. So you need to either open another account with that bank that moves you into another ownership category, or open another account at a separate bank. That is something that I've learned of, which I haven't gotten to this point yet in my life, but if I do, I know that, hey, I need to either have multiple accounts to protect my money, or I need to have multiple banks so that I know that if, Lord forbid, something happened and that bank collapsed, kind of like what just happened out in California a couple months back, my money is protected. They talk about, is it safe to invest in the stock market? You can lose everything. I want to advise everyone of that. But with that, you can also make money. That is why that's why people do it every day. Bottom line, this is just the beginning of your financial education. I just wanted to go over today the very minimal, broad overview of financial literacy. So let me transition this back. Yes. So with that though, today, realistically, what I covered, your banks, big banks, you have your retail banks, you have your brick and mortar buildings that are all around you see every day. Then you have your credit unions. Those are, you could think of those as more as your mom and pop, but remember they're not-for-profit organizations. They typically have lower fees, as well as they typically will offer you a better interest rate on loans. So if you're younger, say you're in that 18 to 22 category, or even older, and you need to try and get your first personal loan or your first car loan, that's what I did. That's where I got mine, because they offered me like 2 to 3% less than a corporate bank was offering me. So like say Bank of America or Truist or Chase or USAA even. They were offering me a way better interest rate, and also the fees are typically lower. So if you're trying to minimize your expenses, that is a way that you can do that. Then we went into the types of accounts, your checking and your savings accounts. I would advise anyone to go and look to see what kind of accounts do I actually have right now. Are all my accounts checking accounts, or do I have all savings accounts? And see, hey, what are the actual limitations on these accounts that I have set up? So if I have a savings account, if I needed money 10 times this month and I had to do 10 separate transactions, am I allowed to do that, or is there a fee that comes with that? Then we went into your high yield savings accounts for when you have the bigger lump sum of money that you're trying to set aside. Your 3 to 6 month expenses. We talked about beginnings of, hey, you need to have a budget. If you don't have one, I'm going to create a video on how to create a budget. I highly recommend you to like the channel, like this video, comment below, and subscribe so you can see that budget video. And then we started talking a little bit about your 401k, the stock market, and bonds. And we ended with, this is a basic overview and the beginning of your financial literacy journey. I would love to help any and all of you. Please, though, try and help me get this out there as much as possible. Like it, comment, subscribe to this channel. If you have any questions, feel free to reach out. You can message me directly here. You can message me over on Facebook, or just ask me here and I'll gladly reach out and talk to you guys about anything and everything. But until then, peace. I'm out.